Hello, this is the Tradesight U.S. Stocks and Futures and International Forex Market Preview and Economic Roadmap for the week beginning Sunday, the 20th of June. Happy Father's Day to all the fathers out there. Ending Friday, the 25th of June, 2020. We're almost halfway through the year, which is just hard to believe. Keep in mind the following Wednesday, the following week is going to be an interesting week because, first of all, Wednesday is end of month, end of quarter, end of half year, often a turning point in the market right around there, but usually the Tuesday, Wednesday might be a little slow and they print the statements, get their bonuses, etc. And then that Thursday and Friday lead into the 4th of July weekend. 4th of July this year falls on a Sunday. Markets are closed on Monday, but expect people to leave a little early, maybe Friday, maybe Thursday, never know. Typically one of the slowest weeks of the summer. We'll see what happens. Here's a look at the dollar index daily chart. As you can see, getting a little bit stronger right off that. Look at that 13 buy signal and curled right up and boom, right on the money on that one, right? So some good strength in the dollar finally. The euro, though, is the inverse of the dollar index, heading down. The pound dollar also heading lower, heading back. Look at that red static trend line and how well it held back in March and April. Let's see what it does here in June. The Aussie dollar breaking the new lows for the last 6 months. A little chance that Forex is going to get interesting here. So weird time of year for it. Usually things are slow in Forex in July, but we'll see. The euro yen also breaking down a bit here. The pound yen rolled over as well. So there's definitely some action available in the Forex markets, and we'll keep plugging away there. Here's the euro dollar 30-minute candles for the whole week in the charts here. You can see Monday and Tuesday were just horrible, and then you finally get the Fed announcement. Oh, sorry, this shows you. You know what this chart is? I apologize. Let me switch this up because I just realized that this and this are supposed to be. Yep, flipped. There it is. So now you can see the end of last week. So Monday and Tuesday were really, really bad, and Wednesday all the way until the Fed announcement, and then that's what started the move. High to low for the week is 300 pips on the euro. That's the best we've seen in a while. The pound dollar also just over 300 pips, but again, Monday, Tuesday, and most of Wednesday were dead, and the move came afterwards. So again, we'll keep plugging away at Forex here, and maybe we'll get some interest. Strange time of year for it. Here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures form, and you can see that we had been running up against that risk line from the 13 sell signal and then rolled over. So that 13 signal is still very much in place. One of the targets would be the red line there, that static trend line at 38.30 or so, which is a few hundred points down, 300 points from here. So if that happens, that's obviously a decent move and probably wouldn't be a problem. Market needs maybe a pullback here anyways. Some of these valuations are out of control. Crude oil, on the other hand, up 46 cents on Friday to 71.50, off the highs, but set new highs this week for the year. As we're entering the summer months where energy is going to be needed and people are traveling. Gold down $10.90. Gold has really dropped here. So the inflationary concerns are not really showing up on the gold side. S&P cash, look at that, right up to that risk line exactly. Lost 55 points on Friday. The NASDAQ 100 down 114 after making new closing highs the day before. The SOX down 78 points. Let me go back to the SOX here for a second. The SOX down 78 points. And again, not quite getting up there to those highs. Biotech's down 15. Haven't really gone anywhere in a while. Russell 2000 down 49. The VIX closes up $2.95. That's a big move up in the VIX. So again, we got down in the mid-teens and now we've curled back up. Let's see if we got that same move here in the tradable VIX. Yeah, a little bit. Not as much as you'd think. The Russell The trend closed at 2.08. That's a high reading on the trend. Puts the 10-day at 1.36. That's almost the highest the 10-day moving average has been. NASDAQ volume was 6.1 billion shares, but remember, this was triple expiration on Friday. That's why it was so boring. There's a lot of volume that's not real volume, and you can see that here. So that's the best volume since back in April. But again, I wouldn't count it as much. The advanced decline ratio on the NASDAQ, negative 1485. More stocks down than up by a lot. Actually, one of the worst in a while. And on the New York, negative 1560. So again, one of the worst breadth days we've seen in a while. Google down $32.65. Still hanging near the highs, though that's a blip there. Apple down $1.33, nowhere near the highs. Netflix up $2.43. This thing has done nothing for the better part of a year now. Amazon down $2.34, also near the highs, but hasn't done anything for the better part of a year. Tesla, it was up $6.71, also not much there, right? Facebook down $6.85. Zoom gains $1.29. Might be the end of a ride there for a little while. Goldman Sachs down $12.67. Big volume on that Goldman too, by the way. TLT, the bond, 20-year bond ETF, up $2.69. As rates head lower, actually. In the Dow, down 533 points on Friday, down quite a bit for the week, actually. One of the worst weeks for the Dow in a while. But notice the 13 sell signal that was in place on the Dow, and we used that one too. The risk line was perfectly used. So all these 13 sell signals on the S&P, the ES, and the Dow all coming perfectly to fruition. Here's the Bitcoin chart, just around 35,000 again, and rolled over a bit, and put call ratio closes at 0.70. When we go to 10-minute candles, you can see the whole week on the ES, and you can see it was also very, just like the Forex, flat opening and pretty flat day until the very last few minutes on Monday. Tuesday, flat opening and very flat day, drifted down. Wednesday, flat opening until that Fed announcement. Then it shook down lower and came back. At this point, you're basically even for the week, right? You haven't done anything. Thursday, it's basically opens flat, dips, but comes back and closes flat. And then Friday, the gap down and closes at the lows. That's your big move for the week was actually in that gap. I missed 30 points. So, it wasn't really tradable from that perspective. NASDAQ side, on the other hand, was making up new highs on Thursday. So NASDAQ side actually closed green for the week, which is kind of interesting to think about. All right, so that is the current layout of the market in terms of the technicals. Now let's take a look at the economic calendar. Sunday, the Rightmove HP Housing Price Index out of the UK and retail sales out of Australia. Monday, just a little bit, NHPI out of Canada, and then Westpac Consumer Sentiment out of New Zealand and their credit card spending. We're already into Tuesday, and we haven't had a number here in the U.S. Japan's core CPI, public sector net borrowing out of the UK, consumer confidence out of Europe, existing home sales out of the U.S., along with our Richmond Manufacturing Index at 10 a.m. CB Leading Index out of Australia, final manufacturing PMI and flash services PMI out of Australia. Monetary policy meeting minutes out of Japan, flash manufacturing PMI out of Japan. Goods trade balance out of Australia. Then we've got the flash manufacturing PMI and services PMI numbers out of France, Germany, the broad European sector, and the UK. Then Canada has their retail sales Wednesday morning. US does its current account. Swiss National Bank quarterly bulletin at 9 a.m. on Wednesday. Again, these are all Eastern Standard Time. Then our U.S. manufacturing PMI and services PMI numbers. New home sales here in the U.S. Crude oil inventories at 10:30. Japan's SPPI that night, and then we're going into Thursday already. German IFO business climate. We've got the ECB economic bulletin. UK has their rate announcement out of the Bank of England. Final GDP number. That's the third look for the first quarter GDP number at 8:30, along with durable goods. The initial and continuing jobless claims number, that's the weekly number, and the goods trade balance, preliminary wholesale inventories. We've got natty gas at 10:30. We've got trade balance out of New Zealand, consumer confidence out of the UK, Tokyo core CPI out of Japan. And then for Friday, to wrap it up, money supply out of Europe, private loans out of Europe, CBI realized sales out of the UK, 10-year bond auction out of Italy, Bank of England quarterly bulletin. Then you got core PC price index and personal income and spending here in the U.S. and revised University of Michigan sentiment here. So that is the week. I would say it's kind of a light week. None of our big three. No Fed announcement, obviously. No GDP. We are about a couple weeks away from getting into earnings. But I think more important is the end of the half-year mark, which was a week from Wednesday. hopefully this is a very straightforward trading week and there is some action. Looks like it could be the downside if we get it. And I think we would be happy with that. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We'll help you out for a couple weeks. Have a great trading week.